Thank you very much. Good morning, ladies and gentlemen. It's indeed my pleasure to discuss with you prospects of the media industry. I'll start with some insights in the television space, the market opportunity, the key trends that are shaping our television industry, the key challenges that we face, and then briefly touch upon Z Entertainment as a company, and then of course we can open it up for Q&A. So the current size of the television market, from the chart showed there, it's a projection by FICCI KPMG Media and Entertainment Report of 2014. The television industry is poised to grow at a CAGR of 16% over the next 4 years. Some of the key growth drivers for us, of course, we all are experiencing this, the positive economic outlook post the new government formation, growth in the ad spend to the GDP ratio being the lowest, and I'll cover that a little bit more detail in some of the slides ahead. Digitization with phase 1, phase 2 having been completed, we are looking forward to phase 3 and phase 4. The expanding TV subscriber base itself is a key growth area for us, and of course the scope in growth in ARPUs from its current levels. Let's have a look at each one of these drivers. As we all know, the GDP growth will fuel better growth for all industries, and television will be not left behind. The NSE Nifty, which is another indicator of economic sentiment, has risen consistently over the past few months. The ad spend to GDP ratio being the lowest currently in our country at 0.3%, where the global economies are more comparing towards or trending towards 1%. This we expect will be a good driving change for the industry. Just look at the ad pie market expectation of growth. It's expected to grow over 13% for the next 4 to 5 years. I am a little bit more bullish on this. I expect this number to be a little bit higher. The TV subscription base itself is growing over the last 5 years. We can see the total households have moved from 213 million to 234 million. The TV owning households went from 123 million to 153 million. The cable and satellite penetration is as high as now 93%, recorded at 145 million. And digital out of that is 78 million, which is a CAGR of 37% over the last 5 years. We all know about the 4 phases of digitization. 2 phases have been completed in approximately 40 cities with more than 1 million population. While implementation refers only to the seeding of set-top boxes in these markets, the actual pass-through of subscriber acquisition forms or consumer billing is yet to happen, and that will be driven through the TRI directive over the next few months or few quarters. Phase 3, phase 4 was a dampener when it got delayed. After the formation of the new government, it has been delayed by 1 year each respectively. December 15 will be the new sunset date for phase 3 and December 16 for phase 4. Both of these will account for over 100 million cable and satellite homes. Just have a look at how the subscription income is growing in the market. The ARPU has already been rising over the last 2 to 3 years, especially driven by the DTH or the satellite market. We do expect that underreporting with digitization will fall to the bayside, and hence a growth in total subscription market of over 17%, and the broadcaster share in the same will be even higher, at higher than 26%. Sorry, I think I skipped one slide ahead. That's the slide I was referring to in the last comments of mine. Moving on to the next part, which is the key trends shaping the industry. Regionalization, as I've always talked about, will be the next big push. Major expansion in the regional entertainment market we've seen over the past few years. Many Indian languages like Bengali, Marathi, Tamil, Telugu, Kannada, Malayalam, Bhojpuri have anywhere between 30 to 100 million native speakers each, followed by the niche segment of content, which will see a drastic growth. Currently, the total number of channels operating in the country are about 700 plus. This is expected to rise to about 1200 plus over the next 3 years. The broadcast audience measurement system is taking good shape. The rollout is currently expected for first quarter of the calendar year 2015. The implementation of this will have a significant impact on television industry, as the current incumbent rating system in the country covers just over 60 million homes, whereas over a 3-year period, starting from 100 million homes, we will cover the entire universe of cable and satellite over a 3-year period. BARC will not only measure primary television, but also the secondary screen, whether it's your mobile phones or your tablets or PCs. And BARC will not just use the socio-economic class as the sole basis of measurement, but will also talk about product ownership and education of the chief wage earner, apart from just the socio-economic class. We have seen a major surge in content, especially through the HD channels. We nearly have over 45 true HD channels now existing in the country. HD, as you all may be aware, is the highest ARPU level currently in the market, operating between $8 to $10 per month. And I expect healthy growth on advertising as well as subscription revenue through HD penetration. The changing landscape of advertising. Hyper-local advertising is becoming a reality today. Through technology, we can implement selling of the national beam split into multiple beams. You can buy anything from a city to a state to a region or the entire country itself. Digitization, with its return path data from the consumers, will give us better understanding of how the consumer is behaving. Hence, content as well as advertising will become far more directed, leading to much more yield. The new advertisers like e-commerce, 4G platforms, and other new segments that are entering the television market will also add significantly to the pie. Online ad spends, this is something that I get lots of questions on. We have seen a healthy growth in video consumption over the online space, and I talk about only the video consumption because that's where we operate. As you can see, a large part still goes to search and display, but the other segments like mobile, social media, email and video are the key growing factors in the value chain. Multi-screen consumption is on the rise. On an average, we are spending now over 4 hours of our leisure time in front of a screen, whether it be a television set or your mobile phone or a tablet or a PC. Some of the challenges that we face in the industry: the current low pricing in India on advertising as well as on subscription will offer scope for growth. Directives from regulators to reduce the ad minutes per clock hour, but we expect that the restricted inventory will also provide an opportunity for value growth. The lack of alignment between the distribution value chain, which is the multi-system operator, and the last mile operator, has been a major hindrance to the digitization process so far. Technology, the transponder capacity available to DTH companies still is growing at a very slow pace in the country, and dependency on the government in completing the process of digitization, coupled with, lastly, the poor internet infrastructure that our country sees, it has been a hindrance for video consumption in India. This is a brief overlook of the industry. I'll quickly run through some of the challenges that I just talked about, again put up there. Quickly run you through the Z entertainment piece. These are the markets we operate in, from Hindi entertainment to sports network, regional entertainment, English entertainment, music and lifestyle. Our product offering by genre is listed there, starting from Hindi entertainment, followed by the movie cluster, regional language, English language, our sports offering, our music and lifestyle offering, the HD offering from our stable, and our international products which are customized for local markets in local languages from Arabic to Bhasa to Thai as well as now Indonesian Bhasa. Let's quickly have a look at how we have performed on the viewership share, which is a key metric for our growth strategy. We have gone from just over a 12% market share or viewership share in Q1 of financial year 12 to currently nearing 16% in the last quarter of the current fiscal. This has led us to beat the industry growth of about 11%, whereas Z in the first half has delivered upwards of 19% growth in advertising buy. Our international operations, as I talked about, our presence is across 5 continents through over 34 dedicated channels, catering not just to South Asians anymore, but also to the non-South Asian communities of the local markets. We are currently customizing our content in Indonesia, Saudi Arabia, Russia, and Thailand. And international subscription contributes 8% of the company's top line for first half of the current fiscal. Our digital initiatives, Ditto TV, which is India's first linear OTT platform with presence in over almost 200 countries now. Our user base has grown to 5 million users with over 500,000 paying subscribers on a monthly basis. We are available across all technology platforms. Our second offering is the largest growing web portal of the country, India.com, with over 45 million monthly unique users and 150 million monthly page views. Quickly, financial overview, and then we'll open up for Q&A. This is how our revenue stacks up. Advertising contributes 57% plus for our business. Our subscription revenue is broken up into 2 parts, international at 8.1% and domestic at 30.4%. And others is largely syndication revenues or revenues from our music business, which contributes 4.1%. Our balance sheet is a debt-free balance sheet with strong net cash position. Our results comparable for full year last 2 years and first 6 months of the 2 years, financial year 14 and financial year 15. We are delivering a healthy EBITDA margin of 29% as against the industry average, which is a low single-digit number. We do expect that this year will be a high growth year for us on a full year basis, and we look forward to growth in the future years as well. We've returned over 10 billion rupees through a combination of dividend and buybacks in the last 4 years. Our financial year 14 equity dividend was rupees 2 per share, and we do have a redeemable preference share issue out there which earns a 6% coupon aggregating to over 20 billion rupees. Well, that's it from my side, folks. I'm happy to take questions.
So I'll open the floor to questions, and I'll also have a couple of questions between yours. So anybody wants to ask?
I have a question on the recording facility available on set-top boxes and how potentially that would impact advertising, where consumers can potentially record and skip the advertising.
So currently the number of DVR boxes in the country is very low, but as price points come down, of course, penetration will go up. DVR services globally are sold at a price which is higher than your linear broadcast of service. Hence, there is a premium attached to skipping ads. And so we expect that the revenue will be made up through that part if advertising is skipped through the DVR technology.
Yeah, hi. I just wanted your views on the subscription revenue growth potential from a broadcaster perspective over the next probably 3 to 5 years.
So as I talked about in my presentation, all expectations are that it will be upwards of 20%. In fact, FICCI KPMG report puts it at 26% plus kind of a CAGR growth for the next 5 years for broadcasters.
Do you think there's a possibility of any further delay in the digitization deadlines, or you think this should be a sacrosanct deadline?
Well, I think the answer should be coming from the government, not from me. But are we capable of implementing in these timelines as a country? Yes, we are capable of implementing it. Of course, any implementation as seen in phase 1, phase 2 also after the sunset date took anything between 3 to 6 months. That kind of a delay may be expected, but I think the industry is capable and geared to fulfill these deadlines, and I hope we stick to those.
You have been very vocal about viewership fragmentation. So, with the new Hindi GC channel launch or the major channel launch that we are planning, wouldn't we also end up doing the same and probably cannibalizing on the existing market shares? Could you please talk about that?
Yes, as you rightly said, I have been quite vocal about viewer fragmentation, and therefore our strategy was always to lead the fragmentation rather than getting fragmented. I would expect that with our strategy of launching, whether it's a Hindi GE or the regional strategy, will be that the sum of the parts will be larger than the whole or the current number. So as long as we are incrementally growing, we should be all right in terms of our growth pattern.
And also, you had a grand vision of the 2020 in which you really want to be one of the largest broadcasters across the world. So could you please throw some light on the progress on that and what kind of investments could that entail?
So all our international expansions and the domestic expansions are driven towards the Vision 2020. We are diversifying into several new territories, as I talked about, whether it be Indonesia, Thailand, Russia, Middle East. We are looking at Africa, we are looking at Latin America as other key markets. No immediate plans on the cards that I can talk about. Within the domestic market, apart from expanding our portfolio, we've also added a new business to our kitty, which is the Z Music Company, which is about music publishing and running a music label. Within a short span of 9 months, we already at a 45% market share in that segment. So plans are on track for achieving our goal for 2020.
Thank you.
Punit, I have one question on Star has implemented this a la carte of wholesale pricing of content. Now, how do you think that will impact the industry, and what are your plans in that direction?
So firstly, I must say that it's a welcome move that Star has done. What it will do is it will tier the content for the consumer, which means you take basic content in the base pack at the lowest price, and premium content is stacked on top, and it comes at a higher price to that, just as DTH companies have been doing for the last several years. This will drive the consumer ARPU growth, and therefore better profitability for the entire value chain, whether it's the last mile operator, the MSO, or the broadcaster.
Also, in the ARPU chain, what we have seen is a lot of media industry have been banking on the fact that with digitization, etc., the ARPUs will go up, but they have been quite stagnant or inching up very marginally. When and how do you think this ARPU movement will go upwards? What is it that is preventing this thing?
So it's a chicken and egg story, Anish, that DTH is unable to take the ARPU beyond what they've already taken it to, apart from the fact that they still take 10% growth year on year, because the cable prices are still undervalued. I think once the cable industry starts the tiering and the packaging of the content that I just talked about, definitely the scope of ARPU going up is there in this market. We have done consumer immersions not just in metros, but in the tier 2 cities. We've done them now in phase 3 as well. And the consumer is willing to pay for compelling content. Therefore, we don't see any reason why the ARPU should stay artificially low. Even the price of basic necessities in our country has grown higher than inflation. There's no reason why television, which I can't by any distinct fathom that it's a basic necessity of livelihood, has seen less than a 20-25% growth over the last 2 decades.
May I just add a supplement question to what Anish asked Punit? So we all agree that the market is fragmented from a cable side, and therefore artificially the price is low. If you looked at digitization happening by the period that we talked about, and then looking at the example of leader pricing of Star, which effectively translated $30 increase to the consumer, if at all. If you were to give a crystal gaze 3 years, 4 years out, where do you see ARPU pricing? Because I personally believe it can double.
So my expectation on ARPU, and I'll split it into two parts of the market. Phase 1, phase 2, my expectation is that ARPU in a 3 to 5 year kind of scenario should be anywhere between $7 to $10, whereas phase 3, phase 4 will be a little bit lower. It will be anything between $5 to $5 around should be the ARPU in phase 3.
So what you're saying is people like you will have EBITDA margins going up significantly.
Well, I would hope so.
Also, one question.
Hi, Punit. Thanks for your presentation. Really, one thing, today it is that about nearly 90% of the money which today all the broadcasters get are actually paid by, 6 DTH and 10 MSOs. So are you actually seeing a change in, because India has about nearly 5,000 MSOs. So are you seeing that on ground level, the other MSOs are actually starting to contribute, because that can be a big flip to the money which the broadcasters get? And also just touching upon the ARPU point of view, which you were talking about, that today, it's a very well-known fact that a movie ticket in India, a movie ticket costs much more than the monthly ARPU, and we are at $3, and the likes of about 25, 30, 50. So, so on the ARPU front, do you think that this star RIO pricing, which Anish also touched upon, that a point of time can come that all the broadcasters can actually go to the RIO model, and then ARPUs can climb? So to move to the RIO, is there a specific time frame, or any broadcaster can go to RIO as and when they want to? So what's the thought on that?
So I'll take the first question, that the top 6 and the top 10 MSOs contribute 90% of broadcaster share. The number is not too off. It will be, in my view, it will be, for the top 4 broadcasters, it will be about 70% or the 4 top aggregators. But that number is fast changing. The independent MSOs, it's a process. The process of audit and pricing. Today the yield on an independent MSO is far higher than what you get from a national MSO in any case, on paper. But it's a process of doing their audits, getting the subscribers actually seen in their system and pricing it out to them. That takes time. And as you rightly said, with 5,000 MSOs out there, it takes time to conduct this audit process, and hence it will correct itself over a period of time. The second part on ARPU growth, while this is not the forum for me to comment on Star's RIO strategy, I can tell you for sure, I can't comment on other broadcasters, we will be taking our pricing up year on year so that the ultimate ARPU growth comes in. We have seen in this market that if you depend on the last mile operator or the MSOs, they are not doing anything about it. And therefore, if the power really has to shift towards us, then we have to push it down and make them implement it. And that's the reason, I would be a proponent of taking pricing up year on year with MSOs.
Thanks.
Just also some couple of questions on, you have certain loss-making properties like the sports franchise. How do you see that shaping up, let's say, over the next 2-3 years? And also, you've launched a Hindi entertainment channel. How do you think that's shaping up? When is it expected to break even?
So the sports business definitely has been in losses over several years. I think there is still not a clear visibility as to by when will the sports business turn around. I am quite hopeful that with the consumer pricing changing, and TRA has been already talking about tariff forbearance, if that is to come in hopefully sooner than later, will have a direct impact on a business like sports. Because then you can actually premium price content which is on live basis to consumers. And only those consumers who are willing to consume it live will be paying for it. And we've seen this phenomena globally. That globally, sports content is priced anything between 30 to 60% higher than general content. And there are enough takers out there who will take it. Because from my perspective, I would rather reach only 30% who pay me 5 times than reach 100% who pay me 1/10. So it makes no sense on that basis. In terms of the Hindi GE, I think you're referring to Zindagi. So this product was created for a very high-end market. It is all imported content from across the borders, catering to the higher socio-economic class based in metros and mini metros. I think we've seen enough, while the rating system may not throw up very significant numbers on this, but there is enough buzz out there, and we have started to see advertiser traction already happening. Starting next year, hopefully this channel will turn pay also. I think our investment horizons are normally anything from 3 to 5 years, and this will be on the lower end of that cycle.
Thanks.
If there was one discontinuity which would cause ad prices to go up, what would that be?
Ad prices. I think it will have to be the rating system. Because currently the rating system tracks ratings on a percentage of viewership rather than absolute viewership as a number of people who have consumed the content. And as we know that the universe has continuously expanded, whereas the percentage has not. Therefore, selling on a CPRP metric, which is cost per rating point, to a cost per thousand or cost per mil, is the significant change that will bring up the ad rates going up.
Any more questions from anyone of you? Okay.
So we have been launching channels across categories, and as you mentioned, we have been leading the fragmentation strategy. So do we think that we have covered enough, or do we have more gaps in products which we want to fill in the next few years?
No, you see, I think it is driven from a perspective that is there a critical mass of a niche audience available for a product. If you identify that, then there is a need for a product out there. So are we done? No, I don't think so. We are not done as yet. We don't even know what 80 million of this country is consuming on media today, because we just don't have the rating system or the tracking system to see it. So I don't think we are anywhere close to being done. Whether it will all be serviced through television is again a question mark. It may not be all serviced through television itself. One could directly go through the digital mediums to the consumer rather than going through the traditional mode of linear broadcast.
Do we see any traction in the last thing which you mentioned? I mean, could India move the Netflix way and give content to, say, specialists who deliver it over the internet only? And could that lead to cannibalization of the main form of television?
So can a content creator go straight to the consumer? The answer is yes. Technology will enable that. Today, the technology may not be available in terms of bandwidth in our country or effectively priced bandwidth in our country. But future will be that, where the creator of the content can say, I do not want to go through you, Mr. Z, I want to go straight to the consumer. So technology will enable all those things. So today, while we may compete with 700 channels, tomorrow I may be competing with 70,000 content providers or 700,000 content providers.
So with digitalization now finally taking shape, and I think as you mentioned that the ad to GDP ratio is also pretty low. So do you think there can be further international competition that could come into India?
So all the names that I can think of from the international markets are already present here. I think somebody will have to make a significant mark in those markets before wanting to come here. Having said that, competition has been intense since forever. I can remember I've been in this business. So anything is possible in our country. I mean, when I'm talking about 730 channels going to 1200, they have to come from somewhere, and it's all going to be competition.
And particularly for the Hindi G genre, do you think there's scope for a new person launching new channels? Not existing broadcasters, I'm talking from a new broadcaster completely.
Yeah, we are just seeing one launching as we speak, right? You could have seen the hoardings all across Mumbai city. So there are people who are creating niches within the Hindi GEC. I don't think it's a comprehensive GEC strategy that any of us are employing. We are all finding the smaller niches within the Hindi GEC space to address two audiences. And as I said earlier also, yes, there is scope for more content to come out there and find its segment of viewers.
And so just continuing on Arit's question, as in, how big do you think Ditto TV can be from a 3 to 5 year perspective? I mean, what internally would be thinking on that?
You see, again, as I said, going direct to customer will always create a better experience, not just for the customer, but even a better yield for us. So I can only say this, that we will be pushing it hard going forward. Of course, the limitation of technology today restricts us because it is very expensive in terms of the bandwidth consumption for the consumer. But just as it's been evident anywhere else in the world where consumption has shifted or cord cutting has been the order of the day, there's no reason for me to believe it will not happen in India. The whole purpose of launching Ditto TV was to take advantage of that phenomena as and when that happens.
Thank you.
So if there are no further questions, I would like to thank Punit for joining us for this event.
Thank you, Anish.